Hello there, and welcome to the latest episode of Mondays with Matthew. I'm Windermere Real Estate's Chief Economist, Matthew Gardner. Now, although there were only 3 data releases of interest last week, they were all very big ones. So let's get straight to the numbers. Last Monday, the National Association of Home Builders released their Housing Market Index for October, and the numbers were pretty mind-blowing. Builder confidence rose by 2 points to 85, and that broke the record that was set just last month. Now, it's also worthwhile noting that September and October, well, they were the only 2 months that we've actually seen the index rise above 80 since its inception back in 1985. Record low interest rates are clearly boosting demand, but I also believe that what we are looking for in a house has changed, with COVID-19 generating far greater interest in the suburbs, ex-urbs and small towns, and that's where most of the new development is occurring. Now, any reading above 50 indicates that more builders view industry conditions as good rather than poor. And all the individual components of the index, builders' views of current and future sales conditions, as well as traffic, well, they are all now at record levels. Builders are feeling remarkably confident, and I think that they have every reason to be. Next up, September data on residential building permits and starts. Starting off with permits, and I'm just looking at single-family permits here. Well, they rose by 7.8% to an annual rate of 1.12 million units. That's a number we haven't seen since 2007. Interestingly, the number of developments that have been permitted but have yet to break ground, well, they also rose in September to the highest we've seen since 2018. Hopefully that means more supply down the road. Single-family starts, they jumped by 8.5%. to an annual rate of 1.11 million units last month. Another huge number. And as we saw with building permits, the last time that starts were this high, again, back in 2007. These were all pretty amazing numbers. But before you start to get too excited, I've got to reiterate my concern that very high material, land and labour costs, they're all making it remarkably difficult for builders to bring homes to market that buyers can afford. This is likely why the number of permitted developments that have yet to start is so high. Only time will tell if they've figured out a way around this issue. I hope that they do. Okay, last but by no means least, the big one, existing home sales across America. Wow, sales jumped by 9.5% in September to a seasonally adjusted annual rate of 6.54 million units. Now, some of you may remember me saying that I was expecting to see solid numbers as we move through the fall, but I also suggested that sales would actually be higher if there were more homes for sale, and the data supports this. Available inventory dropped by 19.2% year over year to just 1.47 million units available. This is almost an all-time low. Now, at the current sales pace, that's only 2.7 months of supply. Now, that's the lowest number since the realtors began tracking this back in 1982. Now, it's also worthwhile mentioning the data showed vacation and resort home sales jumping. They were up by 34% year over year. I think this also further reinforces my belief that more people are looking to wherever they want because of their ability now to work from home. But it's not just that. I also think that because of COVID-19, many are buying resort homes as a replacement for traditional hotel-based vacations. We'll see if this continues. Tight supply, well, that is also continuing to push prices higher, with the median sale price in September coming in at $311,800. That's up by 14.8% when compared to a year ago. That's the fastest pace of growth since the data started to be collected all the way back in 1968. Unsurprisingly, supply is lowest at the bottom end of the price spectrum, and that's causing prices to rise faster there than at the more expensive price points. When we look at just single-family homes, again, incredible numbers. Annualized sales came in at almost 5.9 million. That's up 21.8% year over year, and also up by a very significant 9.7% when compared to August of this year. The market remains very tight. Just 1.2 million homes are for sale, months of supply coming in at 2.5, another record low. And prices are naturally reflecting massive demand and limited supply, with the median sale price measured at $316,200. That's up by 15.2% when compared to a year ago. We haven't seen this pace of price growth since back in 2005. And the numbers in the multifamily arena, well, they were also positive, but not by quite as much. Sales were running at an annual rate of 690,000 units. That's up 13.6% year over year. There are currently 226,000 units available. That's a relatively low number, but inventory levels have been rising for the past several months. Now, I am thinking possibly that COVID-19 is leading to more owners coming to market. Now, that said, there still appears to be demand as prices rose by almost 10%, but sale prices were down by 0.2% when compared to August. Now, I'm not worried about this right now, but there is 4 months of inventory, essentially a balanced market, so it'll be worthwhile watching how the multifamily market acts as we move through the rest of the year. But more importantly, I'll be watching what happens next spring. So, there you have it. And I think you'll all agree these were pretty impressive numbers across the board. No one can deny that housing continues to outperform, but I will again reiterate my concern over the pace of price growth. It's absolutely not sustainable, and it has to start tapering off at some point, but not quite yet. With that, as always, if you've got any questions about my comments today, I'd love to hear from you. But in the meantime, take care out there, and I look forward to seeing you all again in a couple of weeks. Bye now.